I'm glad that you've been able to join us on our first webinar of the year. Thank you for walking this journey with us and honoring our invitation. So before we begin this webinar, allow me to give you a brief introduction as to who we are. From this small presentation, it won't take much of your time. So we are Octagon Africa Financial Services Limited, and Octagon Africa Financial Services Limited was established in 2007, and we are an award-winning leading regional financial services company. And we have our headquarters in Kenya, and we have subsidiaries in Uganda, Zambia, and Tanzania. And we deal in the public and private sector in 4 strategic divisions, which are pensions administration, trust services, insurance brokerage, training, and actuarial consultancy services. So our vision is to enrich lives through innovative financial services and solutions. That is why we have this webinar today. We hope that it's going to be a good start of the year, a very positive start of the year. And our mission is to safeguard the financial future of our customers through lifelong learning, risk management, and retirement solutions. So thank you very much for being here today. So one notable thing is we have a strategic partnership with Alex Forbes of South Africa, and this partnership was established in 2020 after thorough review of Octagon Africa financial services processes, governance structures, and systems. And some of the benefits that have been brought along by this partnership is investment consulting capabilities, global and international research experience, human resources, product development and innovation, and enhanced financial reporting. So this goes to show that we are a global brand and we are proud to be associated with you today. So today we're going to have, these are some of the services that we offer. I won't go much into that because I know Sophia will speak more to that. But our topic today on insurance covers that you need for your home and family this year is brought to you by our brokerage arm, which is Octagon Insurance Brokerage. I know most of you know us for our pension services, but we'd like to introduce you to our brokerage services. We have top of the line brokerage services. We tailor solutions based. Sorry. We offer solutions, we tailor solutions based on your needs. So today our speaker is Sophia Ndega. She is an insurance expert here at Octagon Africa, and I can't wait to see what she has in store for us. I know, Sophia, you're on the line. Without much further ado, I will give this to you, but I'd like to let you all know that this meeting is being recorded, and after Sophia does her presentation, we would like to engage with you. So feel free to raise your your hand. I can be able to unmute you and we can hear any questions that you may have, or you can type in the chat section and we'll be able to get to your questions after the presentation. I remember I didn't introduce myself. My name is Elizabeth Wanja. I am the brand and communications officer here at Octagon Africa, and I am glad to see you here. Sophia, thank you so much for your time. The floor is yours.
Thank you so much, Elizabeth. I don't know whether to say Happy New Year. I know we had a debate somewhere and we were discussing on when people should stop saying Happy New Year. There are proposals that Happy New Year should stop maybe around April. Even if you've not met someone and you meet them in April, then it should be a Happy New Year. So I don't know whether you're still saying Happy New Year to your friends. Glad to have you around, and I request that we make this session as engaging as it can get. We will be discussing insurances that you need for your family, for your home, for yourself as an individual. So kindly let's use the chat section. You can as well unmute and ask a question or raise your hand, give a suggestion, give a comment, ask your question. Thank you so much. And I hope you all are seeing my screen, please.
Yes, we can see your screen.
Thank you. So here is what we'll be looking at. I hope my screen is changing as I move along.
We're still on the first slide.
So thank you. So
Yes.
thank you for the confirmation, Liz. And I'd also love to know what your expectations are from this webinar. So kindly let me know in the chat section, what do you intend to have achieved or have learned by the end of this webinar? For now, this is what we'll be looking at. We will look at what insurance is, basically. We'll look at the benefits of having insurance, and then we'll look at the insurance process, some of the types of insurance products that we have, policies to consider for yourself, for your home, for your family. And then we'll look at why do we need to engage with Octagon Africa. And after that, as good students, then it should be time for us to take action. So first things first, and kindly, if someone could either unmute or let us know in the chat section, what is your understanding of insurance? So you could let me know that in the chat section. So basically, insurance is a risk transfer strategy in which risk management strategy in which then you as the insured will pay a premium to the insurance company, and they safeguard you that in case anything happened, then you are compensated. We have life insurance, we have general insurance, and those may operate differently. But quickly, I will move on to the next screen and say, so why should we take up insurance? What are the benefits of having insurance? Anyone? The benefits of us having insurance in the chat section? Or unmuting and telling us, why do we need insurance? I don't know, Liz, whether any of us is engaging in the chat and telling us why they think we need insurance.
Not yet, Sophia, but ladies and gentlemen, feel free to engage. You can raise your hand and I'll be able to unmute it. Let's make this an interactive session.
Asante. So reasons why we need insurance, there's so many benefits, but I've highlighted just a few. The number one reason why we need insurance is that insurance gives us peace of mind. If I'm seated here and I know that I have an insurance policy for a particular risk, then that gives me assurance that in case of any eventualities, then someone would come through and pay me. So that gives us peace of mind. Number two reason why we need insurance is that it gives us stability, financial stability as businesses, as a family. For example, and it was in the news, for example, a business in town, that is Nairobi CBD, which caught fire a few days ago. And you can imagine if something of that nature happened and there was no insurance, it means then the family is destabilized, and especially financially. And when there's financial stability in a family, in our personal lives, then a lot comes with that. So another benefit of why we should have insurance is stability, and especially financial stability at individual level in our businesses, in our families. We have another
Sophia,
benefit.
sorry to catch you, Sophia. We have an answer from Victor Ogola. He says we need insurance to secure ourselves in case of any eventuality.
Excellent. So to secure ourselves in case of any eventualities. So let's keep those suggestions or comments coming through. So another reason we need insurance, and this is especially for life insurance, is long-term wealth. Like you're able to keep paying periodically, and at the end of the day, you will be able to accumulate wealth for yourself. And it's also a good way to create family legacies, that is family incomes, even in future. We would talk of tax benefits, especially where someone has taken, for example, a life insurance for self for a period of around 10 years. Then towards the end of the period, you get to enjoy good tax benefits. And we all are looking at how we can save a few coins. I know we have been talking of taxes day in and day out, and that is giving us some terrible headaches. So last but not least, why we need insurance is that insurance helps us to achieve life goals. For example, you can take up an insurance policy to help you maybe buy land in a few years, and also plan for your retirement. So that would give you a financial kit for your retirement period. So there's so many benefits why we need insurance, but for now, let us stick with those. But I recommend that you, after this, you go online and check other benefits of having insurance. Briefly, I will take us through the insurance process. So we have the insurance company, then we have you and I as the insured. So when we, as an insured person, then comes to the insurance company will look at whatever we are presenting for insurance. They will do a process that we would refer to as underwriting, just looking at the risk, determining how much the person should pay, and that is what we refer to as the underwriting process. And then after that, you get to pay the premium. Documentation, you get the policy document, you get after not after sales service, rather, maybe servicing of the policies. In case of a claim, then we have someone review the claims, and this is done by experts. And then after the claims review, then we get the claim settled. So basically, that is the claims, or rather the insurance process. The next one. So we now get to start looking at some of the products that we offer. And this webinar, we will focus more on products that we have for individuals, that we have for families. So these are products that we have across the different sectors. So the first one, we have life and pension. And pension, we could take up a pension product for yourself as an individual, what we refer to as an individual pension plan, or IPP. When someone attains retirement, I know some people have been given pension lump sums, and in a few years, the money is gone. So it is advisable that when someone retires, instead of taking your benefits as a lump sum, that you get to purchase an annuity. And an annuity allows you to be getting periodic payments. Pensions, again, under corporate, we have corporate pension, we have umbrella. So this is for companies. Individually, we have life assurance. We would take up our education policies for ourselves and for our children. Yes, I said for ourselves because you can take up an education policy for yourself. We would have medical insurances all across, from family, individual to corporate. And specifically, I should mention this, but I will also be mentioning it throughout in the course of the webinar, that we have post-retirement pension. I know post-retirement, it becomes a bit challenging to get insurance, that is medical insurance. Under general insurance and liabilities, we would talk of motor, we would talk of personal accident, and so many others. But because I don't want to jump the gun, allow me go now into the individual products. And I don't know whether we have a question so far, please.
None yet, Sophia. Oh, I
Thank
see
you.
one. Sorry, I see one from Rachel Muthoni. She says, how soon after retirement does one access their pension? Is it a tedious, seamless process?
Thank you, Rachel. So how soon after retirement does one access their funds? By law, should be within the year or within a few months, one should be able to access your pension. But we will also be addressing, so we will address that in the course of the webinar. Thank you, Rachel. How soon after retirement should one access their benefits? So allow me go to the first product, that is motor insurance. Motor insurance, by law in Kenya, everyone should have a motor insurance. I know we have different categories. We have third party only, but for now, let me focus on comprehensive. And what would it cover? It would cover bodily injury to third parties. It would cover their properties. It would cover anything that you would do to another person out there. And more importantly, it would also cover your vehicle. So what is our motor insurance package like as Octagon? We have a motor insurance package. Allow me start by saying that when someone has a motor vehicle, they would bring the documents to us, and then we would engage the market and get rates that are suitable for their insurance. When it is a fleet, then we get to do discountings, and that is the last part that we have indicated that where one has more than 3 vehicles, then we engage the market and get discounted rates for them. But generally, we have a package that has free political violence and terrorism cover, a benefit that comes at no additional premium, excess protector, that in case of an accident, that one would be, I know the inconveniences that come with it, that you have been so used to a vehicle and then there is a claim and your vehicle has been taken to a garage. So what you do within those few days as your vehicle undergoes repairs is that we give a courtesy car that you can use for around 10 days as your vehicle undergoes repairs. Another benefit under motor insurance is the AA road rescue. You have gone on a road trip, wherever, and your vehicle breaks down. So what happens? We get stranded, but with AA road rescue, then you get someone to come assist you, fix the vehicle, and even tow your vehicle to whatever location you intend to have it repaired. Other benefits is, I know we have standard products in the market, but we have a product that is enhanced. For example, windscreen limits, towing limits that are above the standard policies. So we have negotiated rates for motor private, motor commercial. For example, this I just picked as an example. Someone with a vehicle of around 5 million would get a rate from as low as 3% with the benefits that I indicated above. For motor commercial, a rate of around 4.5%, again with the benefits that I listed above. So that is the motor insurance package for you. Before I go to the next product, there is always an assumption that if I get a motor insurance product, then I am covered and I'm good to go. But I have a question here for you, and I'm asking, when you get a motor insurance policy, did you know? You know those things that we ask of, did you know? That your family and yourself as the insured person are not covered on a motor policy. I don't know whether any of us knew this. Is this something that you're learning for the first time, or did you know this? Again, you could unmute and let us know. So what happens is, if you have a motor policy, you can always, and this is open to all, even for people who don't have cars. We have a product that we refer to as a personal accident insurance. Give an example. You're walking, especially now that it is raining. You're walking on the streets, you slip and fall. What happens? Or you're in your bathroom having a shower, and with the soapy things, you slip and fall. You in your kitchen doing your stuff and you get burnt. So what happens? We have the inconveniences. For example, you are a business person. You have a business that you open every day, and such an inconvenience has come up. It means that at that point, your business, as you are unwell in your bed or in hospital, wherever, as you recuperate, your business is also unwell. So we have personal accident covers that would cater for different things. I have a friend who a few years ago got involved in an accident along Thika Superhighway. Unfortunately, it was a major accident, so he lost his leg. And you can imagine what that means. It means that that person's life has been altered and altered completely. Someone is working in a factory and they get an accident and their hand is affected and it has to be amputated. Again, that is a very significant change in an individual's life. So this product is a very critical product, personal accident insurance. So what does it cover? It covers anything accidental, anything unforeseen, not sicknesses. Yes, not sicknesses, but anything accidental. And it will give benefits such as death benefits. For example, a family has a breadwinner pass on. So what happens to these families? We read of, is it yesterday? Some people were traveling wherever in a matatu, and around, I think, more than close to 20 people were affected. They died on the spot. So what happens to the people that we leave behind in case such a thing happened? So we have different benefits under the personal accident insurance. One of the benefits is death benefit. And when you're taking up this policy, it has different categories. It shows you that for a death benefit, you can get, for example, you can get 250,000, you can get 500,000, 1 million, all the way to some policies have even up to more than 20 million. We have what we refer to as a permanent total disability. The example that I've given, someone has their leg or their hand amputated. So you get a benefit for it. For example, if someone had taken up a policy for, say, a limit of 2 million, and they pass on, they would get a whole 2 million. And a hand has been amputated, they would get a good percentage of this 2 million. Then we have a benefit that we refer to as a temporary total disablement. The one I said, you've been involved in an accident. So as you recuperate in your house, your business is also recuperating with you. But the policy has a benefit that we refer to as a temporary total disablement, where for the days that you are on sick off, then you are given some money by the insurance company. The other benefit is medical expenses. We know that medical expenses, and we're told that most of us are an incident away from poverty in case something happened to us that required medical bills. So a personal accident insurance would cover medical bills that come as a result of an accident. We have funeral expenses that this person has been involved in an accident in this case being any kind of an accident, bathroom, wherever. And the family is now given an amount to facilitate the funeral expenses. Last but not least is what I have talked about. A hand has been amputated, a leg has been amputated, and you need the artificial leg, artificial arm, then the policy would give such a benefit. I have just picked one limit that, for example, someone that is taking up a cover with the death benefit of around 250,000 would pay around 2,000 per year. So this is one of the most critical yet affordable products in the market. And it is critical. I hope you pick the importance of it in case such a thing happened to one of us, a breadwinner, any of us as members in the family. So unless we have a question, allow me go to the next product. The other product is what we refer to as a domestic package insurance. We have our good homes rental or homes that we own. And we have valuable items. I'm sure as you sit there, you can figure out how your house looks like, and you can see the electronics, you can see the building, you can see what else, the domestic workers that you left in your house, your precious laptops, your precious phone, and these gadgets are quite pricey these days. I know some of them will go the way to, we have gadgets at 200,000, 300,000 for phones, for mobile phones, for laptops, for jewelry, etc. So what a domestic package covers, this is a home insurance cover that would cover your buildings, that would cover the contents in your house, the valuables, your mobile phones. I know a mobile, last month, I was in a vehicle and I saw someone's phone just being snatched from through the window. And I imagined what that meant for them. It meant that they would have to go back to the market and buy a new gadget. Sometimes these incidences come when we don't even have money to do replacements. So it would also cover your domestic servants. By law, all employers are supposed to have cover for their employees. And employees in this case would also include our domestic servants, both gardeners and our house helps. And it would cover them for death or injury while in course of employment in our homes. And at this point, I should also remember to ask whether your house help has come back from the December holiday. The debate that has been going on over house helps coming back in January. So the last bit of a domestic package is that it has a section that we refer to as home owners. So owners or occupiers liability. Give an example. You are even a tenant and you host someone. Some visitors have come to your house, and as someone is engaging, they slip or fall. Or someone has come with their kids, and as they are playing in your compound, they slip and fall. And you know, these days, as Kenyans, we've become quite litigious. We are knowing that legal or the courts are really working for us. So what would happen in such an incident? You've organized a party, you've invited your friends, someone has come with their children. As they are playing around, a kid slips and falls. What would happen next is this parent would, for example, go to court and sue you for negligence. You know, the negligence, we always talking of negligence, even where sometimes you may have done your very best as the occupier or the owner of a premises. So what would happen in such incidences? If you had a domestic package insurance, then this policy would come in and facilitate one, the court process, and two, any awards that come through the court judgments. So that is basically what a domestic package covers. Your precious items, the laptops that you carried with you, your jewelry, the laptops, and noting that it also helps us cover our domestic servants for injuries or death when they're working for us. So below it, I've listed some of the risks that are covered. For example, if your house caught fire, there's lightning, there's flooding, and especially now with the rains, break-ins. For example, during the December holiday, most of us traveled and left our homes unmanned. So in case there was a break-in and someone had a domestic package insurance, the policy would come through and compensate them. With that, any question? I go to the next product.
Yes, there are a few questions here, Sophia, but I can start with the latest one from Julius because this is based on the domestic package. He's asking 5K per year.
Yes. So yes. It's actually that is a minimum that I indicated. So what happens with the domestic package? I have my house and I want to get insurance. So what you would do is you would give us the value of your buildings. For example, if you're the building owner, you would give us the values of the content in there. You would give us the number of staff that you have, both domestic and outdoor servants. And then with that, we would give you a quotation. But again, domestic package is one of the most affordable products that we have in the market. So with the 5,000, it is very possible to have a domestic package. It's a very affordable product. So around 5,000, it is possible to have yourself covered for these items, for your workers, and for liabilities to the third parties.
Thank you, Sophia. I see Aisha has her hand up. So, Aisha, I have unmuted your mic. You can raise your question. Aisha? Okay, I see her comment here on the chat section. She's asking, is burglary also under perils covered for domestic package? And then we have another question from Julius who says, does it go for rental house if you don't own your own home?
So I'll start with the first one. Yes, burglary is covered under domestic package. You've left your house, come to work, or gone to your business, and then in the evening you walk in and you realize that someone came and vandalized or tampered with your padlocks, with the grills. That is covered. And it would also even cover the damages that they would do as they access the premises. So that is covered. Question 2, Liz, was?
Question 2 is from Julius. He says, does it go for a rental house if you don't own your own home?
Thank you, Julius. Yes, now let me go back to what I've listed as the cover entails. I've talked of this product covering buildings, covering contents, and covering domestic workers. So you realize for someone who is, for example, living in their own house, so they're the homeowner, house owner rather, all these sections would apply because they would be covering the buildings. They would be covering the items within the building. But if it is a rental house, then you may not cover another person's building. There's something we talk of insurable interest that you cannot cover in insurance, something that you don't stand to lose financially in case of a loss. So you may not cover the buildings, but then you would cover your content, you would cover your valuables, and you would cover your domestic servants, and you'd also be covered for liabilities to third parties in the sense that you are the occupier of that premises. I hope that answers the questions.
Thank you, Sophia. We also have another question from Edith. She's asking roughly how much will be covered for the 5K per year?
Roughly how much would be covered? For example, for someone who may have I may not give the values that would be insured, but you realize for someone maybe with let's say a moderate house that is including the contents, it is possible to have a policy that would cost you around 5,000 per year. So what I would advocate is you could share with us the value of your buildings if you're the homeowner or the house owner and the items that are within it. And what you would share with us is you would share the items and with it. So you could do an Excel, for example, and on the Excel, you would list the item and the values for them. And then with that, we can give you a quotation. But with a moderate house, it is possible to have a cover that would cost you around 5,000 per year. Is that in order?
Yes, thank you, Sophia. So for those who would wish to get a domestic package cover, as Sophia has stated, you can state in the value of your items on an Excel sheet and send it to insurance@octagonafrica.com. I have shared the email address on the chat section. I will also share a WhatsApp number if you find it easier to send on WhatsApp, also on the chat section, so that you can send us the details and we can engage you with a quote. Thank you, Sophia. Before we continue, do we cover the questions that were asked earlier before? These were not on the domestic cover.
For the
Is that
products that
okay?
we've covered?
Yes. For the pension, we're going to cover that. I see we
Yes.
have some questions on pension. We have a question on PRMS as well.
Okay. Thank you. So and thank you so much for your engagement. So let's move to the next product, which is what we refer to as group plus expense cover. What a group plus expense cover is, what group last expense is the other term we would use for last expense is funeral expense. I don't know whether and I would imagine you have found yourself in this, where you have at a given point received more than 10 WhatsApp invites. Some of them would include you joining people to support with weddings, planning, baby showers, bridal showers. What other things do we get invites to support? We have baby showers, we have weddings, we have all those. So what a group plus expense cover is, it is given that at a given point, all of us will transition to whatever you believe, whether the next life, others believe in incarnation. But when death strikes, the challenges that a family faces is one, the mourning of a loved one, and two, sometimes the financial burden that comes with. And we realize that as Kenyans, we are a social community, so to speak, that when our funeral happens, then we will have an event, or not an event per se, but we will have even people maybe coming to the premises every now and then for a whole week, and that comes at a cost. Sometimes someone has passed on, and the people that we would invite to support us to facilitate the burial at those given points either don't have money or have other engagements, and they're not really able to support us. So we may create WhatsApp groups, but sometimes those WhatsApp groups we are sending to people that are already overburdened with other WhatsApp groups, for example, for the events that I've mentioned, even medical and all that. But we have a product that we refer to as last expense. This is a product that we have opened to groups, to registered groups, and to companies, where maybe, for example, if it is a company, they would come in, register their members, submit their data, and then we cover. In case there is a demise, then we pay an amount which I will be showing in the next screen. It would also apply to families, especially when we meet in December for holidays and we are discussing chamas, this is another product that we could float within our networks and within our family setups. So with that, allow me to go to the next screen, which will show us what this product would cover. The product has different options from all the way from option 1 to option 7. And we would have what we would refer to in this case as a principal member. A principal member may be either the father or the mother in the family coming in to cover their spouse, their parents-in-law, and their children, that in case of death, then the insurers, or we would give an amount, for example, what I've highlighted here, and option 1 that we, in case the principal died, we would give 50,000 for option 1, all the way to 500,000 for option 7. That applies to even a spouse, in case a spouse passed on, parents and our parents-in-law. And we talk of sometimes of black tax, that even our extended families are part of us. So this policy allows us to cover in case there is demise of a parent or a parent-in-law. It would give us a 50,000 for option 1 all the way to 150,000 for option 7. The product or the policy also allows us to cover a maximum of 4 children. But you realize just below it that in case someone has more than 4 children who are within this age of 2 weeks to 21 or 25 and they're schooling, they can be covered by adding an additional premium, and it is quite affordable. You realize, for example, for option 1, that the parent would be paying 250,000, and for option 7, they would be paying 1,000. And what this comes with is, if they're taking up option 1, they would get a 50,000. If they're taking up option 7, they would get a 200,000 for a child. It covers the parents and parents-in-law. I should have gone back to page 1 and showed us that it would cover a principal and a spouse for all the way from 18 to 80 years. And for parents and parents-in-law, all the way up to 90 years. And you realize, I know some policies will say that once someone hits a certain age, then cover ceases. But this group last expense cover is a lifetime cover. That if one takes up cover when their parent, for example, is 88 years, 89 years, 90 years, they would be covered all the way up to whatever number of years God gives them, so long as cover is renewed every year. So that is what the product looks like. So that becomes group last expense cover. And a critical product, especially as I said, for us as a communal or a social setup where something happens and we need to cater for family, cater for funeral expenses, and so many other expenses that come with it. In the interest of time, I may move to the next product, but please tell me in case we have a question. So other products, other policies that you could take up for yourself, for your family, is life assurance. And I will go to the last one, which is endowment policy. At the start, I said that we can use insurance to create wealth and to also meet our lifetime goals. What an endowment policy is, this is a product, an insurance product that you will take up for a specific number of years. You pay premiums either annually or semi-annually or monthly, depending on whatever you find convenient. And at maturity, it pays you a lump sum. Some products will also have periodic payouts, and at maturity, you get a lump sum. In case of death, then these policies would come in, pay whatever. For example, someone has taken up a 1 million policy, that in case of demise, the family would be paid a 1 million. During the period of insurance, they would also be receiving periodic payments, and at a maturity, they would receive the 1 million lump sum. So you realize that you can use this for your own education, for your children's education, to purchase assets, and also to plan for your retirement. So to get these products, you can engage us, let us know, let us have a conversation, and we can create a product for you that would be flexible and that would coincide with either the project that you intend to start or your children's education. For example, now I know we have the JSS. For example, you want a product that would help you cater for secondary fees, JSS, yes, secondary school fees, and education these days is quite pricey. But you realize that you can make that easy by starting a product. And we always talk of it is always advisable to start, especially when our children are younger, or to start way in advance so that again you are able to stretch, maybe get a product that would go for a number of years as compared to starting when your child is going now to high school or to JSS or university, and you want the product to start paying maybe in the next 2 years. So it is advisable to start paying early. So at whatever level your child is at, we can engage and have a conversation on what product we can tailor for you to cater for the various needs. Medical insurance. And I don't know whether my colleague Naomi is on call to assist with the what I've listed below, post-retirement medical insurance. But basically, a medical insurance would help you with the inpatient when someone is admitted, for outpatient, which is regular visits to a doctor, and your wellness checkups. And this is a good way to help us maybe catch diseases or sicknesses or medical conditions way in advance. So it is advisable that at the start of every year or every year to be getting regular checkups. And a medical insurance product would help you with that. We have maternity cover, we have dental, and we have optical covers. So I don't know whether Naomi is on call to maybe give a little bit more on post-retirement medical insurance.
Sorry, Sophia, Naomi is not around.
No worries. Thank you, Liz. But as I mentioned earlier, that when someone has hit after retirement, medical insurance sometimes becomes a bit of a challenge because some insurance or standard policies may not suit because of the age limit. But we have a product that is specifically for post-retirement medical needs that you can engage us for yourself or for your parents, and we can design a post-retirement medical insurance for them, which would cover the inpatient, outpatient, and all the other benefits that I have listed above. So that brings us to the end of the specific product that I was to address. I know we have 13 minutes. So in the next few minutes, I'll just highlight the other policies that we could engage in. But maybe I could give my colleague Abraham a minute to mention matters pension. And as he gets ready, let me just highlight other insurance products that we could talk of. We could talk of pet insurance for, I don't know whether it's Chihuahua or Chihuahua or Chocho. We can get all those pets covered. We have covers for your livestock, for your pigs, cows, and all that. When it's travel time, you can engage us for travel insurance. We have a critical illness cover. This maybe I may just state that critical illnesses are conditions such as cancer that at times hit us and they can set us off our feet. But you can take up a policy that is, and there's a policy that are taken up before any diagnosis, that in case such a condition ever strikes, then what insurers give you is a lump sum to help you maybe even with treatment to reorient your life. So that is basically what a critical illness cover is. We have a professional indemnity for doctors, for lawyers, for accountants. If you are a professional at any area, we can engage us for professional indemnity. Last but not least of the insurances is a goods in transit. I know many of us are moving houses in January, so instead of just being so predisposed, much as you may have a domestic package, when you're moving, it is advisable that you take up what we refer to as goods in transit. That would help you that in case anything happened as your items are being moved from one place to another, they get lost or they're damaged, then insurance would cover. So if you're moving houses, let's have a conversation how we can get your items covered while you are on transit. I don't know whether Abraham is now on call.
As
So,
Abraham gets ready, Sophia, I'd wish to cover some questions we have on last expense cover, but I can start with one last question on the domestic package. Please confirm on insured value versus value at time of, say, claiming of any loss or damage. Is it the same?
okay, thank you for that question. In insurance, we have different ways of looking at insurances. Sometimes you've taken up insurance for an item now, and the next time you're coming to claim, maybe the values in the market for it, that item have changed. So noting that insurance is not a for-profit item, then you would be paid as or based on the price of that item as at the time of claiming. But basically, what I hope I got that, I remember that the words that person, the person who asked that question used, Liz. Basically, what insurance would pay you for what you insured. Liz, please repeat that question so that I get the actual words.
Insured, confirm on insured value versus the value at the time of, say, claiming any loss or damage.
Okay, so thank you. So yes, it would be basically I said basically speaking, it would be the same. Sometimes maybe less, just the excess amount that is usually a very minimal amount, but depends on what you're claiming. So it is the same, less an amount, or depending on what the market rate for that item is by the time you are making a claim. For example, I've insured my laptop today, but by the time I'm claiming, the market value for it has reduced. I would be paid based on the market value as at the time of claiming. Make sense?
It does make sense, Sophia. So Rhoda is asking, do you have a salary protection cover?
Yes, we can get you a salary protection cover. What we refer to, we have the retrenchment policies that we can help you place.
Thank you, Sophia. So this is on the group last expense cover. So Victor asks, annual premium of 12K covers my family and the parents-in-law.
I've gone back to that screen for group last expense. Just below where we have the highlight for children aged 10 and below, we have what we've referred to as annual premium per family. So give an example for a family that has taken up an option. What option do we go with? Let me say option 5. That they have said the principal would be paid 300, or we would have a payment of 300,000 in case the principal passed on, 300,000 in case the spouse passed on, 150,000 in case the parent or parent-in-law passed on, 200,000 for the children. So annual premiums is what is just below the children aged 10 and below. So for example, for option 1 at 1,500,000, that is the premium per year. In case the parents are above 81 years, then we would do a top up of 1,300. In case the parents are above the age of 71 years, then we would do a top up of 1,200. But basically speaking, a family taking up option A or option 1 in this case would pay 1,500 per year per family.
Thank you again, Sophia. So we have a question from Bai. He says, hi, can we have a schedule of annual premiums? Okay, he wants the schedule for the group last expense cover. So we can be able to share that to your email. We can be able to share the brochure on your email. That is no worry. And then we have another question from Victor. He says, what are the documentation required for the beneficiaries and members to register?
To register for group last expense?
Yes.
Thank you. So to register, we would need the list of members. What the list of members would include is the name of the person and their age and the option that they have gone for. But we can have a conversation. So maybe what I would recommend is you can leave us your contact. After this, we will take you through how to sign up for whatever options and for whichever groups. But basically, we would need the list of members. We would need the KRA PIN for the group. Now that I talked of this being a group cover, we would need the KRA PIN. We would need the members, the KRA PIN, and we would need then the premium paid. So basically, the list of members and the KRA PIN.
Thank you, Sophia. I know, Victor, you'll need to contact us maybe with your contact information. And I see even the next comment is from Bai, who's asking for our contact information. Please note that I've shared it below the comment section, our insurance email, our phone number if you wish to call us, and our WhatsApp number if you wish to communicate with us in that way. So whichever is comfortable with you, please reach out to us. We're ready to help you. So we have another question from Alan. Can you address the risks involved with endowment, especially if you're unable to make payments, e.g., due to unemployment or loss of business?
Thank you. So some of the risks and with endowment policies, when someone is unable to continue paying, it is advisable that you engage your insurance company, of course, through the intermediary or direct if there is no intermediary. And some of the options that exist for endowment policy is that if the policy, say, was a 10 years policy, today is in 2024, and it was a 10-year policy, so that would mature in 2034. Some of the options that can be done is redating the policy, that it would still remain a 10 years policy, but instead of maturing in 2034, it would maybe mature in 2035, depending on the period of redating. So one of the options is redating. There's the other option sometimes that part of what you have paid so far can be used to continue paying for the policy, in which case, for example, you had taken up a policy with a sum assured of 1 million. So the 1 million would be reduced, so for example, to 800,000. And then just giving an example, say this is just an example of head, say you're paying 3,000 a month for a policy of 1 million. So instead of continuing 3,000 per year, that the premiums that you have paid so far would be used to continue paying for the policy. So the policy would say, for example, continue deducting just under 1,000, and then the premium is reduced to, the sum assured is reduced to 800,000. So what you would get at the end of the period, instead of it being the original 1 million, you would get 800,000. So those are some of the options that you can get from the insurance company. One, a redating of the policy, that is the maturity, or two, that the premiums that you have paid can be utilized to continue paying for the policy. And sometimes you may get that break, and then your insurance company will allow you now continue paying the premiums once you get a source of income.
Thank you, Sophia. So Justin says, this is on the group last expense cover. What if one picks option 7 and the parents are 78 years old? Does it mean when they reach 81 and above, the premiums will increase from 12K plus 4,100?
Okay, so premiums for group last expense are paid annually. So if, for example, someone has been paying 4,200 because their parent, no, let me say 4,100 because the parent is up to 80 years. And then on subsequent renewals, because this parent will have moved from this bracket to, say, the next category of 81 to 90 at renewal, then we pay the premiums for that age, which would be now 81 to 90 years. But as I said, cover is lifetime. That so long as the premium is being paid annually, that is no breaks in between renewal periods, then cover is for life. So it would be, if they are paying 4,100 and they have now moved to the next category at the next renewal, then they would pay the premium appropriate for that age, which would be 81 to 90 years at 4,200.
Another question still on the group last expense cover. Edith says, as a principal member, can I cover my parents, brothers, and sisters for the last expense cover? Do you have a maximum number?
So whether this person can cover their parents, no, we don't have a maximum number, but we have the policy should be able to at least meet at 80,000 per year. That if we have, for example, a chama that is bringing in their members, then the members should be able to pay a total premium, no, the cumulative premium of 80,000 per year. So you pick that under parents, this policy would cover the principal, one spouse, the 4 parents, that is parents and parents-in-law, and a maximum of 4 children. So we say that in case someone has more than 4 children, then, for example, if they're going with option 1, they would pay an additional premium of 250 per child. That answers the question, Liz?
Yes, that answers the question. Also to let what is this? Let Edith know. Sorry, let Edith know that from what you've said, we don't cover our siblings on the group last expense cover. So another question from Joseph. Kindly give the range pay for a family cover of 6 members.
Of 6 members. So let me see. 6 members. Oh, okay. So I realized this. Then the members in here are more than 6. If one was to do the principal, the spouse, the parents, and the children, but this is irrespective of what number it is. For example, if a family is the principal, the spouse, and 3 children, for example, if they're taking up option 1, they would still pay 1,500. So these are the minimums that a family can pay per category or per option.
Thank you.
Mhm.
As Masibo gets ready, we have a very good review here from Macduff Ogwedo. He says, I was covered under company pension cover with Octagon. I retired on 31st July last year and was paid by 15th September lump sum, and now I'm getting my monthly pension on 20th of every month. Stick with Octagon. The process is seamless and painless and doesn't need traveling to Nairobi. Thank you so much, Macduff. We are glad that you enjoy our services, and we're glad to have you as our client. So I see we still have, oh, Edith says you have answered her question. And we have a question from Mbuvi. This is the last question we have on group last expense. So Masibo, we will be taking you next. What is the maximum number of payout per year for group last expense?
Maximum number amount payable per year per family is 1 million.
Thank you so much. Thank you so much, Sophia, for that and for this wonderful session. You've actually got us to start this year very, very informed. I don't know if we have a hand raised up. Aisha, you can be able to unmute yourself so that you can hear from you. And Abraham Masibo will be going to you next. Aisha?
Yes, good afternoon, team. Can you hear me?
Yes, I can hear you. Good afternoon.
We are indeed grateful, Liz, for organizing this. Sophia, the presenter, thank you so much for putting up everything that you had for us today. However, I only had a few concerns. There is a member who raised a question regarding what happens if they fail to pay monies in under an annulment arrangement. Maybe to add on what Sophia discussed earlier on, there's also what we call a surrender value. If a member fails to pay, they can always apply for their surrender. And these are things that are normally discussed at the inception of the policy. At the inception of the policy, you'll be told about the effects along the way. If you fail to pay or something happens to you, If the insured party dies on, what happens to the family and all that. Maybe that was not discussed. Then also what happens if you have a lapsed policy. This still comes in if a member fails to pay the premium. How the insurance company can help you come up with new premiums that you can still be able to pay. Then another one was about a member who asked a question regarding the values at time of claiming, the values of the items that they had insured initially. The technical team many times would always consider things like the sum insured that you had agreed with the insurance company. That is what will be looked at. Let's give ourselves an instance. For instance, I remember during COVID times, when prices of bicycles went up there, all guys who had insured their bicycles, for instance, I'll use the UGX currents at maybe 400,000 per bicycle. By the time we had reached like the 9th month of COVID, the prices had gone up to around 1.3 million UGX from 400,000. So if someone's bike had been stolen at that time, insurance company cannot be compensating you at that current value. Remember, the premiums that the client paid were based on the sum insured that had been declared at that time. So normally, we look at the sums insured that had been declared by the members. I'll give another scenario in insurance. For instance, if like that very example we talked about endowment, someone had insured, Sophia gave us an example where someone had insured a sum assured of around 400,000 Kenya shillings, I remember. No, she said 1,000. Then she said if along the way you fail to pay, you fail to get premiums, we can always adjust the premiums and reduce so that the premiums you had paid earlier on can be able to cater for the other months that you had not yet paid for. Where she even mentioned we can reduce the sum assured from 1,000 to 4,000. That one can be applied at that time. You get it at that time. However, here, if you had said my bicycle is insured at 400,000 and it's stolen at the time where bicycles are now sold at 1.6, we still pay you based on the other figure that you had earlier on declared. Otherwise, I'm indeed grateful for the arrangement. Sophia, thank you so much.
Thank
Please,
you
that's
so
all.
much. Thank you so much, Aisha. Aisha is a member of our team on Octagon Insurance Brokers. Thank you so much for your input. Thank you, Abraham. I see you there. So we can start, Abraham. So the first question is, how soon after retirement does one access their pension? Is it a tedious, seamless process?
Hi, Liz. Thank you so much for welcoming me. Very much appreciated. Kindly, could you please repeat the question?
So the question is, how soon after retirement does one access their pension? Is it a tedious or a seamless process?
Now, accessing your pension benefits. Sorry, my name is Masibo Abraham. Glad to be here. To access your pension benefits at retirement, depends, but in this case, RBA gives direct communication that these should not take more than 30 days or up once you request for the funds. So within 30 days of claiming those benefits, you should have your funds in your account to be able to settle you in your retirement age.
Thank you, Masibo. I hope, Rachel, that answered your question. Then we have another question here from Joyce. Are there age limits for the post-retirement medical cover? Are there age limits for the post-retirement medical cover?
Well, post-retirement medical cover, you can begin saving while employed. So you can open what we call a post-retirement medical fund, so that as you contribute to pension benefits, you can have a side account that you are saving purely for your retirement medical cover. So assuming you are age 40 years, you can open that account and start saving as early as when you are 40. And then when you get to 60 and you're retired, as you get your pension benefits, you have an account that, continue growing and continue earning interest, but yet still it, draws down to pay benefits that go to the medical fund for your retirement. That could include your spouse. And if you have any child that's, is still a minor, you can include them on the cover.
Thank you, Masibo. I hope, Joyce, that answers your question. We have another question from Frida. She's saying, can one get her pension before 60 years?
Yes, Frida. In fact, the early retirement age in Kenya, and I suppose this, kind of cuts across most of the East African countries, is that at early 50 years, you can have what you call early retirement age. So assuming you have left employment, no longer working, no longer active in the pension contributions, then you can access your benefits at 50 years, depending on what the arrangement is, whether it's a lump sum or whether you require to buy an annuity at this point. At the same time, should you have approval to leave the country with no intention to come back through immigration, then you can get your benefits in lump sum as you transition or move to the next country that you're going to stay with your family. At the same time, should you have an illness, that affects the way you work, and that you cannot continue working in the normal way that you used to work, then you can have a medical report that can be issued to the trustees, who will approve to get your benefits at whatever age that is.
Thank you so much, Masibo. So how does NSSF contracting out work? This is a question from Susan.
This is a very interesting topic. Now, NSSF contracting out is only applied by employers. As an individual, you cannot apply for contracting out for your own benefits alone. If you are saving your benefits to NSSF as a self-employed person, I'll say this is a good thing, but then you need to, look for private providers. And in this case, we have a very good personal pension plan. I think this is the best south of the Sahara, north of the Limpopo. You can access that and then sign up so that you're able to get, enhanced returns and better returns of your benefits. And then at retirement, you'll have access to better mileage, better returns for your fund, and have grown better. But then now for employers can apply for contracting out through an administrator. And in this case, I'm talking about myself. I can help you contract out your benefits for your employees. We will give you a few documents to sign here and there. You give us the list of your employees. You give us your KRA certificate as the employer. We'll submit them to RBA for you. And in a period of 2 weeks, you'll have a certificate of contracting out that all your tier 2 contributions for all your employees will be moving, to Octagon Umbrella Retirement Benefit Scheme. We can support that seamlessly and very fast. Request me today, and I tell you by end of next week, you'll have your certificate with you. And beginning February, you are not sending your contributions to NSSF anymore. They'll be coming to a place whereby they get better massage, better interests, better returns, and your money will grow in a very interesting way.
Thank you, Abraham. So we have another question from Margaret. She says, hi, in case one is retrenched from employment or loses their job before attaining retirement age, can they still access their pension?
RBA has given clear guidelines. This is in the RBA Act, that when I lose my employment or have been retrenched at an age before retirement or before 50 years, then the law allows that you can access 50% of what's in that pot. If you have 3 million in that pot saved and you are age 40, you can access half of that, which is 1.5 million. To sustain you during that time when you've lost employment. But the balance, 50%, will only be accessed at the early age of 50 years, being the early retirement age. So yes, RBA allows that you can access part of those benefits when, you lose employment or you get retrenched.
We have another one from Jared. He's asking, are there MMF or fixed investment platforms with Octagon?
Very interesting. Now, we are in the process of implementing that. Before the end of this year, trust me, we'll have a very competitive money market fund. At the moment, we are offering individual pension plans. We are offering umbrella pension benefits for employers. Any corporate employer who has a pension scheme established, we are the best administrator in this, Africa, and we can give you better services. For individuals, well, when you leave employment or you access your benefits, half of it, and you have a balance, we have a personal pension plan that you can join and get your benefits in that platform. Very good interests, very quick processing process, and very seamless. Virtual by our Octagon pension administration system. Very seamless and very good rates in that case. Back to you, Elizabeth.
Thank you. Another one here from Mary. She's saying, if projection of my benefits is say 5 million at retirement, yet the employer did not remit some amounts, what happens when I retire?
Now, your projection is a high amount, but your employer at some point, did not remit contributions. Then in this case, we'll have to, seek or follow up with the employer to submit those contributions in advance. And even RBA says that for any delays in contributions, the employer should pay plus the interest that was supposed to be earned on those funds at 5%. Now, that should be that can be a challenge. But then with liaison with the employer, can be able to follow up and get those benefits paid to you, so that you don't miss out on that amount that you're supposed to get at retirement age. That's a decision that can be followed up, and RBA has a very good response timeline. So if you have any challenge, you can always visit the website and raise any complaint if there's that challenge with you. Or first of all, go to your administrator, who will be able to support you through that before you even get to the regulator.
Thank you, Abraham. So Joyce asks, how does a provident fund work?
Now, in saving in pension, you have what we call a provident fund, and we have what we call a pension fund. For a provident fund, when you retire or you get that retirement age, you get your benefits in lump sum. You have 5 million in your account, you get it in lump sum. Now, less taxes. This is Kenya. Less the taxes that are applicable. For the pension fund or pension scheme, at access, you can only access a third as lump sum. Less taxes again. Then the 2/3, you can get an annuity with no taxes. You can buy an annuity from an insurance provider of your choice, which we can provide very good competitive quotes for you, so that you're able to get good rates in the industry to give you a monthly pension for as long as you live.
Thank you, Abraham. So we see Susan said, that's great. Please assist with the details of the personal pension plan. We can help sell to entrepreneurs. Okay, I will reply to the comment with our contact details, Susan. So we have another one from Felista. She says, with retirement looming in the next 2 years, currently covered for medicals by employer, I want to get a medical post-retirement cover on retirement now, not before. Can Octagon do this?
Please kindly come again.
No, he wants a medical retirement cover right now, and he has 2 years to retirement. So I believe that this is possible. We'll also share our contact details as to how to get the post-retirement medical cover. So Mary is asking, how do you enforce payment of interest?
Payment of interest for the funds invested. Now, I know most of us who are in pension schemes will get our interests allocated to us by probably April, May, thereabout. The audit of pension funds has to be done. It's done by 30th of March every year. I mean 31st of March every year. Then after the audits, the allocation of interest has to be done to members under the pension scheme. So I don't think there's any kind of enforcement unless there's a challenge. But whatever is declared as interest for the funds is what is allocated to your statements, less the expenses that the scheme has incurred over the year. So I think that can be that's usually done in accordance with the law. They'll be allocated to you when the audit has been finalized.
Thank you, Masibo. I'm trying to see if we have any more questions. So this is can I add a personal pension cover to my employee's portion if I resign from the company?
Yes, Joseph. If you resign from your company and you have your benefits left there, now the best you can do is you transfer those funds to a personal pension plan, whereby you can continue contributing. But you cannot contribute to a scheme that you already left. If you left a company, you left part of your benefits there. The law does not allow you to contribute or continue contributing to that scheme since you are no longer, an active member. The best that you can do, and the best that we usually advise our clients is that once you leave employment, please open a personal pension plan whereby you can monitor your funds, easily. Then you can continue contributing your funds there, but therein, should you get an extra cash that you have not planned for, you have no plan for it, you continue saving for your retirement, that when you get to that retirement age, it's way easier to access your personal pension plan than going back to your former employers asking them to get your benefits. Yeah.
Thank you so much, Abraham, for coming in and letting us know about this pension information. Do you have anything to add?
I think I've just seen Eunice send one more question here. Does voluntary contribution to pension has any other benefit besides building pension fund? Eunice, for pension, and especially if we talk this about personal pension, it's your voluntary decision that you want to, get better benefits at retirement. So even for personal pension plans, there is no limit to how much you can save in terms of amounts. Whether it's like per month, you can send 1,000 and miss the following month, send 2,000 the following month and miss the other month. There's no regularity that you can, you should send this amount per month. And at the same time, this money gets to grow at a faster rate. It increases your contribution and, the mileage, that the more you save, the more you earn at retirement. So it enables you to grow better in terms of your pension funds. I think most of the things we've discussed them, and there's not much to add, Elizabeth. Unless there's any question from the team, I think that's all that I can say about pension. I actually encourage all of us to save under our pension plans. If you are a participating member under a pension fund, do that voluntary contribution for the sake of increasing your pot, growing your pot even better. If you're not a member, it's time you open a personal pension plan through us. Just contact us by the contacts shared here, and we'll be able to support you in how to open a plan and start saving your pension for your retirement. Thank you so much, Elizabeth, for this opportunity, and I wish everyone a very fruitful weekend and a year ahead.
Thank you, Masibo. Before you leave, just one more question, where Mbai is asking, where can one get forms for voluntary contribution from employer or administrator?
Voluntary contribution forms are available at both the administrator and the employer. But it's best, you go through the employer, so that if you are doing check-off, then the employer is aware that they should deduct you an extra amount to send to your pension scheme. So both have the forms, but it's best to go through your employer. Thank you so much.
Thank you. Thank you so much, Abraham, for your invaluable insight. I also want to thank you, Sophia, once again for this wonderful training session. We've truly started January on the right note. I believe we are very much informed than we were before this meeting. Thank you so much for the wonderful comments that you're giving us on the comment section. I know most of you have been asking for our contact details. I've been able to put them on the chat section, but please know that we'll also communicate with you after this webinar, where we'll share the recording, so you can go back to this training and see maybe things that you might have missed. And I know I have noted that most of you are interested in the personal pension plan, the post-retirement medical cover, and the group last expense. So note that I know that you signed up for this webinar with your email address, so we'll be able to share brochures for this product so that we can continue to engage further. And we hope that we're going to hear from you. And since we are here, this is our first virtual webinar. I'd like to let you know that from this year, we're going to start doing physical webinars. And because you have been such a lovely crowd. I'd like to invite you for our next webinar, which is happening 1 week from now on 26th January. This is going to be a physical webinar. I've seen that most of you have questions on retirement, so this is going to be a good opportunity to learn more about pension. The topic for our physical webinar is options available in retirement and how to save on tax. I hope that you'll be able to see it. It's going to be happening at the Institute of Pension Management, which is at Crescent Business Center located in Parklands, opposite Mpisha. I hope we'll be able to see you. We'll be able to send the details also for this physical training to your emails, and it is absolutely free. So we've interacted with most of you on this webinar sessions, and we hope that we're going to be able to see you in person. So thank you very much. Thank you very much, Sophia. Thank you very much, Abraham, for this. I believe that we're going to see each other soon, and that you're going to continue engaging in this session. So thank you so much. I wish you a lovely Friday and a wonderful year. Thank you so much.